Yeah, Monday. What's up, everybody? Monday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had a great weekend, was able to stay cool. I know here in Texas we were in a heat wave up over 100 degrees, so a very, very warm day. But the markets are just heating up as we are going to kick off what we do each and every day, looking for 10 to 12 futures markets from an educational perspective to identify good trading opportunities. I want to let everybody know real quick about a live trading room that we're going to offer on Saturday this week, and it's going to be a trade review session. So our trade review session is going to be led by Justin Krebs, and what he's going to do is he's going to review trades submitted by members. So go to tradersarmy.com/live online to join us, and all you've got to do is click right here where it says join live. To join the class. So tradersarmy.com/live online, Saturday, July 18th, 8 a.m. Central. We will do a trade review session to give you a chance to kind of get trades reviewed, take a look at it with a critical eye from an educational perspective. So hopefully you'll find that to be engaging and enthralling. Let's go ahead and dive into what we do each and every day, looking for our markets. So starting today, with our equity markets on the S&P, we're up about 12 points. We had a live trade room last night and looked at a couple of levels where we may see some potential reversal if we get a pullback. We didn't really get that pullback last night. Last night was a bit of a gap up. We did not put the gap and go play because it just didn't seem like that was a strong enough gap. And the reason for that is because we are gapping up into daily supply. Now, we're basing ahead of daily supply, which typically means that supply is going to break through and we're going to see price continue to rally higher. My belief overall is that, if we get above here, we're going to wind up looking at new all-time highs. So we're maintaining our bullish stance. When I go to a 15-minute chart, we've got a couple of small levels here down below us that are very much in play today. But other than that, I would maybe look for a breakout level up above here if we get higher than some of these levels, provided that we get quality basing. Same thing happens in the Nasdaq. The Nasdaq, we have some demand down below us on a 60-minute chart and a 15-minute chart. Actually, these are both 15-minute levels. I just didn't put the right color on this one. So 250. Now, by the way, it's important for us to have the right color because that determines how long we stay in a trade if it goes against us, right? That determines our 6-candle rule. If price comes into here, we give it 6 candles before getting out of that position. The Russell, same picture on the Russell. We did have a little bit of a pull of a sell-off. We did actually gap up in the Russell to our supply level that we had previously marked, and that supply level that we had previously marked was off of this area right here. So we did have this trade set up from last night where price traded into the level, and we got a little bit of a move away. We did another retest of that right there at the European market open and have now continued to sell off. So if you were short that level, you've probably already hit target 1. In my mind, this 1413 is a decent reversal point for price to come back down. Moving to our commodity markets, specifically crude oil. In crude oil, we had a breakdown line set up here. One of our members last night actually identified this as a potential area for a breakdown. Price has broken down out of this level. Now, if you missed the breakdown, you did get a bit of a retest opportunity right here. And that's really the better entry is on the retest. Now, price is continuing to move down. I think that the next choice for an entry wouldn't come in until this 39.16 by 38.90. So let's keep that area in mind today. Remember, if we get basing in front of that level, it's gonna invalidate that level from a trading perspective. If you are long on or short on this position, I think it's okay if you move your stop right to at the 15-minute level here, right to above this pivot. Just lock in this stop right above this pivot because I believe that that's probably the best idea. Then you've minimized any exposure you have. Gold, we took a breakout trade last night in gold in the trade room. So if anybody is still in that trade, our first target was 1810, as this was a very, very small level, in here for an exposure. If you're still in that trade, I think now the idea is to take your stop and move it up to break even. And since we have moved up above, let me remove these lines here. Since if you've taken your stop and moved it up to break even, now you've had a nice little run up to there. Your first target was 1810. Our second target was right here around 1820. So keep an eye on price getting to that 1820 region. Looking at our bonds and currency markets, we had a little setup last night, but not a whole lot. Most of the bonds and currencies are telling us not to do anything. We have a little bit of a wick over wick supply area up in here, 130 by 145. And now the reason I chose this level, this wick over wick, was because if I pull a fib, this lines up perfectly with a Fibonacci retracement, although I could see us continuing to break down from this level, so look for some basing for a breakdown. In the Aussie, we are between levels of supply and demand, and my 4-hour chart is very, very sideways. And so it's telling me that there's just not a whole lot of tradable opportunities in here that give me high probability. I don't want to force that trade in the Aussie. The Euro, we looked at a potential breakout if we got the prerequisite basing. Unfortunately, we didn't. We just popped right above there on the second touch, right? One touch, second touch, we popped above. So there was none of that prerequisite basing required for us to get long. However, when that happens, you look for what was the origin of the move that got us above there, and it took us back to this area here of demand. And price has bounced off of that demand and is beginning to rally higher. If you didn't catch that trade, which frankly I wouldn't blame you for not catching that trade, as it was identified at, the entry was at 3 a.m. Eastern. So if you was a 3 a.m. Central, so if you are in the United States, that's a tough level to grab. Just wait for us to get another opportunity here. If we get basing right there for potential breakout with a target somewhere up in here. Canadian dollar, we are in between our levels of supply and demand. We do have potential for price to make it all the way up into here, so you could look for basing if we get basing and a breakout above here, because this, we expect these candles to get retraced. This is a speed candle, which we anticipate retracement on that. The Great British Pound. Now, in the pound, we looked at a breakout below this line right here. Now, this was a 15-minute breakout, and that's why I put the note there that said this was 15 minutes. We did not get, once again, the prerequisite basing required for a short entry. Unfortunately, I'd love to say that we did, but the rules, I got to follow the rules, and the rules told me that I needed basing. Didn't really get clear basing. Got one candle in here, but that's not going to be enough to get me in. And so now I'm going to remove that area, but I'm going to look north to see where's a potential reversal if we come back. And now, to me, that sets up right here a potential reversal if we come back in. We also have the potential for a breakdown, provided that we get quality basing, because on a 4-hour chart, we are setting up a little bit of weakness here. I joke around and jokingly call this the Batman cowl trade, as it looks like the top of Batman's helmet. Or a double top is probably more commonly used. But we typically will come down from there with a fair amount of velocity. So look for a breakdown or even a retest to supply. Japanese yen, we've made it back into our potential flip area. So price has come back into the potential flip area. If you're not long on this position, I would say it's okay to get long when we come out of it. So right about here. In this case, your stop would go just below this area down there. I think that makes for a decent setup. Now, I will say on the 4-hour chart, we are still in an upward trend, but definitely seeing a little bit of momentum weakness. And if this area falls, then I would probably just wait. My next level doesn't come into play until somewhere down in this region here. So that one should be good. So remember, live online, tradersarmy.com/live online, Saturday, July 18th. Join us for our trade review session. We look forward to seeing you all in there. If you guys have any questions, please shoot us an email, support@tradersarmy.com. Until tomorrow, everybody, I'll talk to you soon. See ya.